What's going on, traders? It is Tuesday, so you know what that means. It is market forecast with Digital Goats Academy. I'm your host, as always, Antoine Farrar. Welcome to Digital Goats Academy again. But let's go ahead and get into basically our market forecast, where we outline what our predictions are for how the market is going to unfold, which I will say has been playing out, kind of sort of what we wanted to see overall as far as like our directional bias when it comes to indices. So if you're tuning into that channel, hit that subscribe button. It definitely does our channel a solid. But yeah, let me go ahead and get into the charts real quick. So I was looking at US 30 I'm gonna go over a couple pairs. I do want to touch on Bitcoin. I do want to touch on two Forex pairs, but obviously, my bread and butter is indices. So what we're going to do is discuss US 30 first and S&P and go into those other pairs that I just mentioned. So US 30. Now, remember, we've already talked about the possibility of the market selling off. So we're going to have to discuss what has already transpired since the market is open up this week. So you can see what I have annotated on my charts. Let me go ahead and scale out a little bit. What you can see is that I have annotated on my charts is this is a gap. Again, I always leave my markups on the charts. I think that helps with your accuracy when it comes to looking at the market, but also staying true to the trend so you don't get confused. Now, don't have like a bunch of shit that's going on your charts that could cause confusion, but just leave, basically some notations that of major areas of like, resistance, support, things like gaps. So one thing that we always highlight is gaps. So we make sure anytime the market produces a gap, we draw a rectangular box or a circle to identify there was a gap there. Because sometimes as more data is produced in the market, you won't be able to see that information. For the most part, you should be able to see a major gap like this. Now, this brings us to what we were looking at initially. Now, I was hoping that we did get like a big gap that pushed down like here. That's like our first sign that the market wants to push, a little bit lower than probably what investors have been expecting. But we've been expecting this because we talked about this area being resistance the entire time, right? Well, what our predictions were based off of last year is that based off of like the repeating cycle that the market does like yearly, it should want to cool off between the months of like December to February. So we're in January now. We're hitting February very soon, and we can see that the market has overall started selling off across the board when it comes to indices, which is again something that we were predicting since last year, and we were hoping that we would get this so that way we can have better buying options when the market actually starts to find its area of support. Now, what's important is that again, Sunday, so this is Sunday's candle. Sunday, the market gapped down major, you know what I'm saying? Tested like slightly back into the gap, which, we didn't know how far it would test back into the gap, but we expected that the market wouldn't like test, 100% or try to fill the gap completely, right? So again, we've talked about this. We talked about that on what happens on the smaller time frame normally happens on the higher time frames as well, right? So when you're looking at a gap, right? We've seen this like on like a, I don't know, 30 minute, 10 minute even sometimes. And normally with indices, the market pushes away. Has it been on point like that exactly? No. Normally when you have like smaller gaps, the market will try to fill that, push away from it, then come back and test it on the opposite side or completely blow through the gap on the opposite side. So the fact that we got a major one and the market has been pushing away from it, those are good signs that we wanted to see overall. We didn't know how the market was going to produce. Again, we've talked about point A to point B. We identify point A. So let's just say for this context, opening bell on January 16th. Opening bell on January 16th was basically our point A. We're expecting the market to go down, but in between that, until we get to point B, the market can do whatever. You know what I'm saying? So this is our point A. So we're selling off, which we were in this sell over this previous weekend, which isn't something that I promote doing. But again, when you feel like your entry is secure or you're riding the wave of the trend, I definitely promote like, yes, do what you need to do as a trader. You know what I'm saying? Just don't be reckless about it, right? So we're looking at this gap and the market pushed away from it. So in the future, the market will probably fill this gap more than likely. And when it decides to fill it, it'll be on the buy side. So we'll probably have the market play around this area before it actually decides to like blow through it and buy up. So we could have it to where the market buys up. Not now is what I'm thinking, but I'm just kind of talking for future context that we could have the market buy up after it finds some type of support structure that it wants to do, push into the gap, then sell off again, then buy back up. I guarantee all that'll be followed by market structure. So if and when the market does do that, right, we can probably assume that, okay, buyers are in the market and this is a bullish market now. Obviously, there'll be like probably like a big break and then there'll probably be like a push all the way back down to test that to make that buy true. But again, because we're identifying like these type of movements and we're waiting for the data to unfold, we should be ready to catch that buy. But like I said, everything that we've been pretty much forecasting has been playing out within the market. So we're looking at sells and we're looking for the market to continue selling. Now we can talk about like the fundamentals that maybe made this market sell off like that. We could talk about like how Trump is still threatening to do tariffs against the EU. We can talk about how like Warren Buffett, retired during December, so that was his last month. So going into the new year, Warren Buffett is not part of his company anymore, right? And then, not to mention, we probably will be getting a new Federal Reserve president or chairman, whatever you want to say, this year. So a lot of uncertainty or a lot of negativity that's like being filtered into the market that we're pretty much getting the reaction that we're looking for based off of that information. So it could be one of those three. It could be none of the above. You know what I'm saying? But what's important is what the technicals are telling us. So now that we're at this resistance level and now that price has basically showed us that I'm breaking structure, all we have to do is just follow the trend and obviously find our entry. So today we definitely caught a sell after price shot up. What has it been doing? It's been buying up. So again, we've talked about this when it comes to rate hikes, and we talked about this when it comes to rate cuts. So even when you're looking at open and bell, if the market rises up during open and bell and you already identified the trend to be a bear trend, more than likely open and bell is trying to bring the market down. That's what happened today. Open and bell didn't bring it down immediately. I think it was like 11, yeah, basically noon. So we basically rose up the entire day up until the close of London, and that's when the market pretty much sold off from there. I basically confirming our bearish trend, right? So again, I've always talked about turning it to a line chart to make it simple. Reason why you want to turn it to a line chart is because that's the true form of structure. So you can see on the 4 hour, it's not, you can't see that hill or that dip back up that the market or that spike back up that the market did before it pushed down. But I guarantee it's followed by a wick. Yep. So that confirms, well, that's a confirmation that yes, the trend is trying to push down, especially on the 4 hour time frame. When we're looking at on the hour, and I know I'm spending a lot of time on US 30, but that's definitely been my main focus. And again, if you see US 30 unfolding like this, more than likely S&P and the Nasdaq are doing this as well. So we have this area that I identified this this level of consolidation over here. I don't think it's of significance. I just wanted to make sure I highlighted it so that way if the market did start buying up from there, I would say I wouldn't be confused and be surprised that, oh snap, why is it buying up from there? Well, this is a level of consolidation, which I think it's going to ignore. Of course, anytime the market is getting to any form of structure, what is it doing? It's making it react, right? So because we normally see price rebound or bounce off of consolidation, that's what it's doing right now. Not to mention we just went into the reset of the day. So we're about to head into the post market, which is, at 6 p.m. Eastern time. And then we'll gather more data to see what the market is trying to do. But to me, as simply as I could put this is consolidation. The market broke out of consolidation, something that we expect, and then we expect for what? The market to test back into that consolidation. So until we get a little bit more data, like we should expect the market to ride this wave as far as like sellers being in the market. That's what I'm looking at. I'm not looking for buyers yet. I'm looking for sellers. We just have to break up out of this previous low that we made. Obviously, there's imbalance over here if you look at it. We got imbalance right here. We got a little bit of imbalance if price is not respecting this area. So if you're looking for an entry, for me, obviously we want to at least see 50%. But again, this is how the market closed at 5 p.m. So it could still be continuing. We don't know if it's going to gap down again or gap up, whatever the case may be. But I would like at least to see 50%. That'll put us at the previous low. So I could see like a small gap up possibly, but I'm not trying to predict exactly what's happening, just the overall directional bias. So we are looking for the market to continue selling the rest of this entire week. That's what we've gotten since the market opened up on Sunday. So we should continue doing that unless the market hits some level of support, which I don't see us hitting any level of support unless it's going to respect this whole area of resistance. Why do I have that there? I don't know why I have that there, actually. I mean, that's resistance, but I think that we're going deeper, especially since we have this major level of consolidation. Again, if you follow our channel, you know that I do this by color coding. So consolidation is normally orange or tan, either in a hollow rectangle or it's shaded in. So we know that this is consolidation. This is consolidation on a major time frame, which again, we've only had like one touchdown here. I expect the markets to at least want to test this area again, which if if it's going to do that, then I expect us to go lower, all the way back into that gap from last year. So that gap that was made when what was this? When Trump did that 100% tariffs on China again, that was around like October. So I think that we're gonna finally fill this gap, and then from there, we'll have to assess the market. I think from there it's any man's game if we get it to come down by February. But this can be an entire move until October, so we could see the market decide to sell off if it doesn't do if there's not like major news that's triggering the sell. We can see the market like start to like sell off slightly for this entire year up until October. So I could see something like that happening again, which would be crazy lining us back up with October. I have to do some back testing on that. But I know I did a bunch of side talking on there, but that's because like my main focus is on US 30. Now let's go to S&P. So you can see S&P was doing basically the same thing. So we have this level of consolidation that the market broke from. It sold off and then it pushed back up. And this was, yeah, around the same time as that move we had on January 16. This is January 15. So you can see that this validated this consolidation pattern. So as far as like the sell, this we knew this already. This was resistance. And you can see that this high is lower than these two highs over here, creating what? A downtrend sequence. So we've already talked about this. So it's like, it's not no surprise. We were just waiting for it to unfold, right? Not to mention, this is information from last year. So this was what, January? This was going into the new year. So that was like that little new year run that the market did. And now we're back below this. and we have areas that the market pulled back to. Again, turn it to a line chart, make it make sense. This was the gap. So the market broke up out of, and you can see that between S&P and US 30, they kind of look very similar. Like they look alike, and they did not try to test back into that gap that's up here. So let's go ahead and mark that up because we know that the market returns back here, it could sell off again, which it will probably be like turning into a buy. It could reject this area again and then sell off. And then once it test that area again, it'll probably break it through. So it can test it as many times as it wants before it breaks through. But we know that the next time the market tries to revisit here, that's the first sign that it's probably trying to push up and we're back on a bull run. I don't expect this market to stay bearish like the entire year, but like I said, as far as like projections, we got to leave room for error. The market could definitely start selling off until we get to like what would that be? That would be the end of Q3. Yeah, so yeah, the end of Q3. The market can start buying up from, which would make sense, but we got to see, more of this data that's going to be priced in, that was priced in last year that hasn't yet hit the market. So again, we have rate cuts that are supposed to be going on allegedly in January, January 28th, and there's supposed to be more rate cuts priced in. If that's the case, we're already seeing the signs happen that the market is like selling off. But just because they're saying that there's rate cuts, that doesn't necessarily mean that they have to do a rate cut because if the market is already selling, there's no reason to cut it. You see what I'm saying? So they could do something like prices are going to stay the change. I mean, the rate is going to, or the data is going to be unchanged. That's very common. Like I know, the ECB has been doing that a lot. Their data has been unchanged or not nothing to impact the market like heavily. So that's what we're seeing. That's what we could see that happens like with all these, projected rate cuts that are being priced in throughout this entire year. But so we have a gap right here. The market slightly tested into the gap based off the 4 hour. We push down, we tested this imbalance this morning and we push down. So to me, this will probably consolidate, but there's no reason to push the market back up unless it's buying up, which I don't think that we are. I think that the market is going to try to find some form of true support. Normally with indices, the market is like hunting for support. So even though we can identify this as support, that doesn't necessarily mean it's going to respect it. It could still bounce off the market, but overall, at that point, that could just be a manipulation tactic, bounce off slightly, make you think that the market is buying up, and then push it down even further. So that's what I would expect. But this would be like the first point of like major support that we've seen in a while because the market has already broken this area. This was a high over here that we identified last year that the market broke, that is broken currently. And like I said, this was open and bell today. So we can go ahead and we can go ahead and validate that yes, the market is trying to push down based off of this wick and based off of us knowing what happened today. That's why it's important to follow the charts because if you come back in like you took like a I don't know two couple months off, you know what I'm saying? You try to jump in this market as if it was yesterday. Nah, you're gonna find yourself in a world of pain and pretty much be lost. So, like I said, I encourage to get comfortable with whatever forex pair that you're trading, especially when it comes to indices. You know what I'm saying? And never take your eyes off of it, even if you're not like trying to actively find an entry or jump in the market. So the last three currency pairs that I want to discuss is GU, UJ, and Bitcoin. But I want to go ahead and touch on Bitcoin real quick. Now, I will be honest, like I'm super confused about Bitcoin right now. Well, cryptocurrency in general. So had the market, this is what I was like expecting if we were still bullish, right? Which again has me second guessing myself on thinking that we are bullish and that the market is coming down exactly like we mentioned earlier this year. So the reason why I got rid of that data that you just saw, and we're basically in replay mode right now, is that what I was looking at is that if the market was going to buy up, this was the buy zone, right? And as you can see, the market tested this resistance right here. And I know it looks kind of cluttered, but the market tested this resistance, bounced off, broke out of that resistance. Now, for me, if the market was still bullish, why would the market come all the way back down here and even lower to this support structure? I don't think that the buy is valid anymore for cryptocurrency. I think that it is playing off that market cheat sheet that we were looking at. I think earlier in January, if not like towards the end of December, where the market is probably going to get brought down violently. Cryptocurrency had a very big run last year, like a very between, if you really look at it, between 2023 all the way to 2025, like that was a big run to not have no a cool down period. Now again, this is just me speculating. I'm not really formulating a bias, but I am going purely off of technical analysis. And based off the technicals, to me, it looks like this market is actually trying to push down to try to find some form of support a little bit lower than what we projected, especially looking at how 80K is made. Why is my joint? Where is it at? So this area was always bugging me too. Like I was always like, man, that just looks weird for like support. You know what I'm saying? So seeing that the market has already pushed lower than this area that it broke out of, to me, like we're probably pushing down because the fact that it broke out of this area, to me, it shouldn't have, if anything, it should have just tested either the resistance or this consolidation. And we broke through the consolidation and the support structure. So I'm thinking that we're going lower than what we expected. But this could just be back to 74K and then a bounce back up. So I do have to believe that we are at least selling back because look, this is a wick right here. We need the market to fill a wick with a candle. You can see that anytime the market has bought up, it's normally had like, either like another wick or a candle. So this has like missing data, if you know what I'm saying, just to keep it simple. And we need, again, we need structure on the opposite side to validate this move. And then from there, I could probably see the market getting bullish. But just based off of what we're seeing, because I had it in my head that if it breaks out of this area and then starts pushing down, the buy is no longer valid. You know what I'm saying? And you can see that this entire candle, what is this, a weekly candle, is already engulfed this bullish candle right here. So we're looking at a bearish engulfing to possibly push the market down a lot further than probably what the crypto bros are expecting. Let me see. I don't want to be like, a pessimist, but we may be heading back to that. That's just having a watchful eye, you know what I'm saying? Like being mindful about it that we may push down to that 31,000 territory that we've talked about before. I mean, the way the market has already pushed down from last year, like we already said that 120, I mean, 125K was probably going to be the high. We were expecting that. It went to 126K, right? And then the market started selling off from there, basically started creating resistance, and it did. And it sold off from there. And we pretty much assumed that, 74K was going to be our buyback up. It came shy of that to like 80K, but yet we're not done with the data. You know what I'm saying? We're not done with the market actually creating more information to make whatever it is, the buy or the sell, true. Now, if we find ourselves down here, I'm thinking less that we're gonna respect this as support, and I think that we're gonna blow through this. Do I think that we can get a bounce up? Yeah, absolutely. It could do a slight bounce up to not manipulate, but just to correct itself and then bring it down. I mean, just based off this pattern, I really feel like we are pushing down a lot lower. And I know we've been back and forth with how we feel like how the market is like playing out, but just looking at like between indices and cryptocurrency in general, it's like something's happening. And again, the technicals tell the story all the time. So we just gotta, lock in and pay attention to what the market is telling us. But like I said, we've been pretty good at our directional bias with saying that yes, this is what's happening based off of this move. So based off of these moves, it looks like the market is selling off. So that's what we're going to be rolling with. That cryptocurrency is now in a bear state and not in a bull state, right? Which means that sellers are heavy within this market right now. So me personally, I know we discussed it, but I would not be investing in cryptocurrency right now until we see if this market pushes back up to like that 96K region, then yeah, I'll probably say that yeah, investing is still there. But the way it looks right now, I will probably wait and then see, probably going into like quarter two, quarter three, like what prices are showing us. I'm still banking that we might get a move down to like 55 to like 40K, but it could be lower. I doubt that we'll see anything lower than like 31K. But again, this is cryptocurrency, so I mean, when it shot up to 65K, I'm pretty sure people thought that they wouldn't see 15, no, 13K is when it what it went down to. So that was only what that was like a 50,000 if we're just doing basic math, that was like a $50,000 move, you know what I'm saying? Like could happen the same way. We hit 126K, the market could get brought down to I don't know, 50 fit like half of that if not trying to do it by percentages that was pretty much like a 90% move. So if it came back 90% of where it bought up from, we are looking at like 26K 36K, which would be insane, you know what I'm saying? But it wouldn't be far-fetched because it's cryptocurrency. You feel me? It wouldn't be far-fetched because we've already been seeing the market do these strange things that a lot of investors are just not prepared for. But yeah, overall, I'm looking at cryptocurrency to push down a little bit further, unless this week it shows me some other signs, but just based off of it would have to like break this move. And then if we see like an extremely aggressive bull move, to me, that's a sign that, yeah, buyers are still in the market. But the way we're looking right now, sellers are in the market. Hell, if anything, I would have took this sell to be honest, but I don't trade cryptocurrency like that anymore. But as far as like investing, I'll say wait as the market cools off a little bit and let's get a little bit more clarity on what it's trying to do. Now, the last two currency pairs, GU and USD JPY, right? So that's the Great British Pound versus the United States dollar, and then the United States dollar versus the Japanese yen. Now, if you look at the yen clearly has been selling like nobody's business. And the reason why I say that, because what has been up greatly? Gold. Gold has been out of this fucking world, man. Oh my gosh. And it makes sense. When you're looking at what's going to be the superpower this year, it's probably going to be commodities, energies, like tangible objects, coffee, you know what I'm saying? Oil, natural gas, precious metals, you know what I'm saying? Things like that. Like the equity market, futures doesn't look like it's going to be a promising year because of the momentum we had from last year. It was a great year for the stock market last year. Great. Probably too great that a lot of these stocks need to cool off and then do their correction phases in order to continue in, being profitable stocks. But anyway, not to do any more side banter on the stock market. We're looking at GBP USD. Now, we were selling this and we did hit our first target. Remember, I think last week I had mentioned that we took a sell on this and then it hit our stop loss and then the market actually started creating resistance below our stop loss. You can see that our stop loss was a little bit higher. Where was it at? Yeah, it would have still hit our original stop loss. But anyway, this is our new stop loss for our new entry. So as you can see, we entered basically somewhere up here. we still kept our same sell entry. So anybody that was late could still enter the trade. And the market sold off. You can see it sold off, pushed up slightly during Friday. And then what did we have Sunday? We had Sunday a gap. So the market gapped down, and that was basically 87 pips, so like 20 pips off of our target too. But again, still good profit to be made. And what did the market do yesterday? The market actually jolted back up, created new resistance. This is still resistance here. Not to mention, what is this? This is consolidation up here. So still resistance. If anybody stayed in our trade, then they got stopped out. But again, our directional bias is still true. We still believe that sellers were in the market. The market basically gave us a new entry at our stop loss to sell off, and now we're back at our original entry and just waiting for the market to correct itself so we can get possibly another entry. So, just based off of this pattern, I'm looking at the British pound against the United States dollar to still sell off. So, I don't think anything has changed as far as like our directional bias. I just think that the way that the market is trying to create its selling pattern, it's creating resistance first, and then it's going to do its downtrend. Especially like a move like this, leaving like this leftover data. Remember, we need, in order to validate like the buy or the sell, we need the market to do what? We need it to either fill it with a candle or test it with the wick, and it didn't do either. So looking at this, it's definitely going to fill it. And when it comes down here, because this is a gap, it's going to probably fill it 100%, which means it's going to blow through this area, hitting our second target again. So looking at the stop as your new entry and then putting your stop like above or wherever the market is at currently, I definitely think that this is still a reliable trade setup. I'm not trading this anymore because after I take like a loss like once or twice with a currency pair, I stopped messing with it. But like I said, I still think that this is still, our directional bias for the sell for sellers within GBP USD. So, you know, if you see fit on YouTube, take it. If not, you know what I'm saying, assess. But I think that, overall with what we've been predicting for the British pound, especially with, the complications of like Trump versus the EU, I definitely think that sellers are stronger this year, especially since we came from that buyer's market. Same thing with Euro USD, but I'm not going to discuss that. So if we're looking at USD JPY, same thing. We had an opportunity yesterday after the market. So if anybody stayed in, like after Sunday, well, after Friday, the market gapped down. I mean, it didn't gap down, it just pushed down. I don't think there was a gap over here. But look what it did. It created support at our stop loss. So even though it took us out after giving us like 87 pips, it gave us an opportunity for another entry, then gave us a little bit more profit. So if you would have taken that entry from our stop loss, I would have gave you 94 pips, but I caught it at our original entry over here. So it was like 41. Yeah, like 41 pips last night. Sold again. I mean, not sold, bought again. The market took me out. But again, a lot of times, like, our entries just be off and we can't account for a lot of these moves that the market makes. But keeping your annotations on your charts still put you in a better position. So look, if the market is still bullish, which I do think that it is bullish, if the market is still bullish, we're going to be able to take advantage of this move again and probably be able to stack trades a little bit more since it's already created some form of structure down here. Does that make sense? So, don't always count your trade as like a loss just because it hit your stop loss. Your stop loss is there just because I mean just so it doesn't take all of your profit. You know what I'm saying? It's not necessarily there to say, hey, your trade was wrong. It's basically saying your entry was off. You know what I'm saying? So a lot of times we come back and be like, man, the same trade that took me out still was a reliable trade that I could have taken. You know what I'm saying? That's what we're looking at for this. Not to mention just already seeing the influx of the dollar start to be a little bit inflated. So we're taking full advantage of that. When you look at the yen, you see that the yen is selling off because gold is rising. So we could just take advantage of that little bit of fundamental knowledge right there and apply it to the dollar. Is the dollar physically stronger than the yen? If so, yes, we have a bull market that we're approaching, right? But we already expected that. We knew that this was a bull market. The only thing that was off was our entry for another re-entry for the continuation. But to me, this looks like the correction that we need. You have 2 points of contact on a higher time frame, right? Again, support right here. You have your dip. You have your 2 points of contact for your dip. That's the structure we need, which is probably creating a W pattern, which will give us, the data we need for the market to be on a bull run. A lot of times you have to be able to see this before, because when you're seeing it after the move, that's what the market makers or the banks are expecting. And, you're kind of behind when the market had already made its move. So for us at Digital Goats Academy, we try to be in before the move happens. So a lot of times we're still early on our foresight, but we're not in our, well, we're early on our entry. We're not early on our foresight, if that makes sense. But that's all the time I got, traders. Like I said, like I think that 2026 is still going to be a great year for traders. Maybe not necessarily on the investing side. We have to definitely hone in on what's the stock market doing overall, so that way it doesn't, affect us on the foreign exchange side. But I think this is our year, traders. I really think this is our year. So lock in. I hope everybody has a successful trading week. I'll catch everybody on our next video, which will be tomorrow. We'll be doing live trading. That's for my Discord community for YouTube. You'll see me live early in the morning at, I believe, 10 a.m., anywhere from 9 a.m. to 10 a.m. on YouTube Live where you can catch me. So I know we weren't able to upload that live properly because I made a technical error, but we're definitely going to make sure we have our I's dotted and our T's crossed this time around. So I'm Antoine Farrar, as always. See everybody on the next video with Digital Goats Academy. I'm signing off. Peace.